We actually are just getting some headlines from St. Louis Fed President Musalem. Let's briefly bring in CNBC economics reporter Steve Leisman. Steve, what is he saying?
Kelly, Alberto Musalem, the St. Louis Fed president, making some hawkish comments about tariffs. In fact, more hawkish maybe the last time he spoke. He said that he expects from the new tariffs to have both indirect and direct effects on inflation. One-time price increases, those are direct effects. The second round or indirect effects could have a more persistent inflationary impact, he says. The second round tariffs could require more restrictive policy, as in rate hikes. Policy should look through the direct effects, but lean against second round effects of tariffs. He talked about a St. Louis Fed staff estimate. A 10% increase in tariffs, he says, will boost inflation, or the PCE price indicator, by 1.2 percentage points, about half a point from direct effects, 0.7 or a larger amount from indirect effect of tariffs on inflation. He is wary of assuming that the tariff impact on inflation will be entirely temporary, and says overall the inflation risk has increased. Talks about a variety of scenarios. Policy could ease, he says, if the labor market deteriorates and inflation expectations remain stable. His base case is the economy keeps expanding, labor market remains healthy, and inflation does decline towards 2%. But because of all these different possible scenarios, he says a patient approach to policy is warranted right now. A few more things. He says the risks are tilted towards a cooling labor market and yet rising inflation. There's that stagflationary outcome that the Fed is worried about. Surveys, he says, shows the firm's planning to raise prices in coming months. He points to the NFIB survey, which we've told you about. Business contacts to the St. Louis Fed say tariff and policy uncertainty are making planning difficult, and many businesses have adopted a wait-and-see approach. Finally, he says recent consumer spending data has been weaker than expected. Other data mixed. So, Kelly, very interesting comments. Clearly, Alberto Musalem is staking out a more hawkish, or one of the most hawkish views about tariffs from on the Federal Reserve Board. It seems the chair has been a little bit more dovish about these possibilities.